Okay, so first of all, let's talk a little bit about trust frameworks and why they're needed, and what the role has been and will be in data sharing ecosystems. So the problem, the actual sort of problem in terms of the mechanics of data sharing in an ecosystem, and please excuse the fact that these slides say bank and fintech. A lot of our work has been in the banking sector. In order to share data securely and appropriately, you need to solve some problems. So first of all, how is the data provider and the data receiver going to confirm each other's identity? And we are talking about mutual authentication because that's much more secure than simply having the data provider require the prop tech or whoever to prove their identity to them. In this world of AI and deepfake and all the rest of it, it's increasingly become important that both entities authenticate each other to each other. So how do you do that? So that's the first question. The second is to make sure that irrespective of whether they've identified each other, you could also be assured that they are authorized. So it's not just a question of saying, is this Barclays Bank? Am I certain it's Barclays Bank? You also want to know that they are going to be approved to share the data. And that's particularly important. Actually, using a bank was a bad example. Let's say it's an estate agent. How does the bank or the land registry know that estate agent is authorized to request the data that they're requesting? And has consent been provided? Is there technical certainty that the homeowner or the purchaser, the buyer, has consented for that data that is about them to be shared? Once you've established the identity and you've established the appropriateness of the request with consent, how do you actually find the data sources that you want to connect to? How do you then call the API for that data? So what's the process in order to find, request, and then receive the data? How can that be really simplified and a uniform process for everybody? Once you've done all of those parts, you then need to make sure that the data transfer is done securely so that there is no risk to the customer data being leaked or exposed. Other aspects that come into this are things like data minimization. How are you going to be assured as the data provider that the data is going to be treated properly, that it's only going to be used for the purpose that the consent has been given for, and you know what's going to happen to that data once that purpose has expired? So in terms of data privacy, data minimization is a really critical concept. Please jump in if anybody has any questions as I go. And Maria, if you could shout if somebody does. I can see a small pane, but I won't necessarily see any hands up. All hands up. Good, good. Okay, so we've established what we need to do in order to create secure data sharing. Now let's look at the business problem. In the absence of a trust framework, which is a centralized set of rules, roles, permissions, and processes, every single data provider and data requester has to establish trust manually with each other. Usually that's done with bilateral agreements. Bilateral agreements are expensive. You have to get lawyers involved. And if you're talking about a national ecosystem, it quickly becomes cost prohibitive and absolutely detrimental to scale. What you tend to find in, I'm using banking again because banking is the most mature application of this type of data ecosystem globally. What you see in countries without a trust framework approach, where you have to have this manual direct approach between all of the participants, is you see a competition issue. The smaller financial technology companies or the smaller banks have to choose who they want to have bilateral agreements with because they can't afford to connect to everybody, which means that they then can't provide their customers with a holistic, fully national offering, which means that they then suffer and the larger incumbents become more powerful and competition is affected. The complexity as well of having bilateral agreements between everybody is that if you need to revoke somebody's consent to operate in that ecosystem, it's almost impossible to do it in a timely manner for everybody. You have to broadcast to everybody and say, this entity has had a security breach or they've lost their license, they can't operate. Whereas with a trust framework, and I'll go on to the structure of that, you can revoke or suspend the permissions of an entity in the ecosystem instantly for everybody. And we've done that at national scale when somebody's certificates, which are the technical credentials that prove you're allowed to operate, we became aware that they were compromised by a bad actor, and we were able to suspend the permissions and those certificates instantly for everybody until they sorted out the problem, which meant there was no risk at all to the ecosystem, and the bad actor had a worthless technical credential that they couldn't use. As well as the cost and the complexity, it's a huge duplication of effort. And if we start looking at cross-sectorial, which we are for this example of this POC with property, because we're looking at lots of different players, from finance to property to lots of different players. If you look at a manual direct approach, it won't work for interoperability. In the UK, the way that smart data appears to be sort of forming or coalescing in terms of the structure, we're looking at a sort of single trust framework with multiple verticals for the different sectors, so that they can have the different regulator or industry specific tailoring to each one of those verticals, but then they need to be able to call each other. If you have data that you want to get from the energy sector or the transport sector or insurance, etc. If you have this manual direct approach, it doesn't work. It limits ecosystem growth. So that's the sort of business problem. So here on the left, we've got that direct approach that I just discussed. And essentially, in very simple forms, the trust framework is a single sign-on for access to many. So it's a single connection. You are allowed into the ecosystem because you have been assigned a role. In banking, that role could be that you are allowed to access account information. It could be that you're allowed to initiate payments, or it could be that you're allowed to do both. But once you've been given that role by the ecosystem controller, you are only able to request the data for the purpose that you've been given. So when the data provider gets an API call, not only can they identify the caller, they can check that they have the right permissions to be asking for that type of data. And all of this can be established by the ecosystem controller. With property, it will be quite complicated, which is one of the very exciting things about this POC, because you've got issues like what permissions are appropriate at the beginning of the property purchasing cycle may change. So you may have some participants who are not allowed to request a certain set of data at the beginning, but once the property transaction has progressed, they do need to. So that complexity is something that we can test out in the proof of concept. This single sign-on for access to everybody is also self-service. So once a participant is allowed into the ecosystem, and by participant, we're talking about developers. We're not talking about consumers, citizens. The citizen doesn't see any of this process. This is the process that the mortgage provider, the estate agent, conveyancer, etc., will be going through, and it'll be a developer portal where they will be making these requests. But essentially, once allowed into the ecosystem, they can then manage their own shop window to provide details about their organization and list the APIs that they have available that can be called for data. And in that metadata, which is the address, if you like, for the API, it also provides the technical credentials of who is allowed to access it, for what purpose, duration, and so forth. The directory, which is a list, it's like a phone book of all of the data providers in the ecosystem, also has discoverability, so you can search for what you need. So what would happen in the user journey, the consumer who's trying to sell the house or buy the house would agree to share some data. They would then specify where that data is, for example, their bank, and then the data requesting party, the receiver who needs to get to that data, would be able to search the directory for that bank and the API. Yes, somebody's got a hand up.
Hi, Marie. It's Terry
Hello,
Robinson
Terry.
from Land Registry. I'm sure you're going to cover it, but this concept of the ecosystem controller, does that mean there's one entity or body that controls who can join the ecosystem?
What
How does
happens?
that work?
Yeah, so this is something that we'll need to work out in the POC and in the broader working group. The way it works in banking in the UK is that we have a regulator that assigns the roles, the permissions. Then we have Open Banking Limited, used to be called Open Banking Implementation Entity, and they provide that first door front to who is allowed in the ecosystem and what are they allowed to do. You and Alan, jump in here if I'm saying anything wrong, but you could have multiple entities because it can be, you can have multiple trust frameworks that are interoperable. But in property, there needs to be somebody at some point, or somebody, when I'm saying somebody, I'm talking about an entity for property that decides who is allowed to be in the ecosystem and what role they're allowed to play. Once they have been given that role, then the technical aspect of controlling what they are able to do is handled by the technology. So it's codified into what their certificates and the technical credentials that they are able to create using this technology. So it's super secure, but somebody somewhere needs to decide the flow of information, what's appropriate to be requested and received at different points, and what the entity identity attributes look like in order to manage that process.
So there's likely to be a play it back. Sorry, a regulator of the ecosystem, an entity that's trusted to grant access to the ecosystem. That regulator is likely to appoint somebody to contract with somebody to provide the initial front door for the ecosystem itself. And then a final follow-up question: when the end user, so that the owner of the data, so the house owner, as an example, gives consent, do they just give consent to one of the entities, the entity that they're dealing with?
Yeah, again, it depends on how this whole thing is designed, and I think that's one of the sort of big questions that we'll play with in the proof of concept. One of the early issues, so I've been talking to Maria for several years about all of this, and it's only since I've had my hands on technology that we've been able to sort of properly play. But one of the questions that OPDA was struggling with a while ago was how do you assign identity to a multi-entity transaction? And an easy way to solve that is just to agree who is allowed to verify identity. So if, for example, the bank is allowed to verify identity at the different stages in the journey to buy a house, then at any point that identity needs to be proven, an API call to the bank can be done rather than the home buyer having to turn up with lots of documents and so forth. Similarly, you may find that in the proof of concept or in open property, when it becomes a national scheme, there is an entity, a digital property estate agent who can perform all of the functions on behalf of the buyer or the seller. And that's part of their accreditation that they're allowed to manage that whole process for the buyer or seller. So, or it could be that there are multiple entities and there's a chain of actions that happen, and the rules are established between the different parties. That I think is up for debate still in terms of how it will work.
And can I just pick up, Terry, just on the first question you asked about the regulators? That is one of the reasons that we wanted to do the sandbox as a proof of concept, because property is fairly unique in that we don't have a single regulator for the end-to-end or that cover all of the entities that are involved from an industry perspective. And we have some parts of the industry who aren't regulated, including estate agents, software suppliers, etc., who are obviously integral to the property transaction actually happening. So that's one of the things that we'll have to work through as we do this. Like, where does the regulatory permission sit? How do we align all of the regulatory permissions so that whether you are regulated by the FCA or the CLC, that you have the same approach to be able to joining the sandbox? And then who, like at the moment, OPDA do self-accreditation for our firms. How do we then apply the level of accreditation that everyone in the industry needs, all of our firms to achieve? And actually that means that the base level for data standards, technology standards, cybersecurity standards, everything, the bar is going to be raised, because right now we've got a kind of zero barrier to entry in some of those industries. So that's some of the stuff that we will test as we go through the sandbox. And like I say, we are absolutely unique in the multiple regulators, multiple siloed industries, different levels of permission, different data requirements at different points. But as a consumer, I just want to go, here's my identity, who needs it, and share it and know that it's safe, and not see all of that plumbing and working going on in the background.
Yeah, so once we've established the rules of the game in terms of how open property will work, this technology provides, sorry, let me just let my dog out. This technology provides a uniform, absolute technical certainty that everybody is doing things appropriately and properly. But who is allowed to do those is a process that's outside of this technology. There are lots of examples we can draw on globally. There are open banking schemes that do not have third-party licensing. So one of the issues that they have there is third-party risk management. I mean, that's something that's being dealt with in other sectors and other countries, which we can draw on.
Thank you. That's really helpful.
Just to give you an alternative view, which some of you may be familiar with. Aside from a trust framework isn't the only way to do this. Some countries with open banking use an API hub, and what that does is it aggregates all of the data into a central repository. And then that central repository is what the data consumers, the data requesting parties, call in order to get access. That can appear attractive because it's very simple, and the data repository, the API hub, can be a regulator or it can be an organization, a central body. There are a couple of big issues with this, though. It's a central point of failure. So if something happens to that API hub, then the whole property ecosystem is stalled, fails, etc. Whereas with the trust framework, there is nothing in the way of the different parties. The data is only shared from endpoint to endpoint. So mortgage provider to estate agent. It's not aggregated through any central point, so it's much more secure, much more scalable. The other problem with aggregating all of your data into one API hub is that it's a central point of attack for cybersecurity issues. So that's why it's not advised for national implementations of this sort. But that's another concept, just to make you aware of what that is about. So going into a little bit more detail on what a trust framework is. So when you, as I said earlier, when you want to establish trust, you need to be able to define who, you need to be able to define what in terms of what their role, permissions, etc. are, and you need to have a how of how to securely access the data and the services. For anybody mildly more technical on the call, the way that we do this in a trust framework is with public key infrastructure. So it's data is encrypted. You have a public key that can decrypt it using a related private key, and it's kept confidential. Maria?
Sorry, I'll come off mute and not do mute bingo. For those of us who've been through the open banking, like PKIs, we're quite familiar with, and most of us have used open banking for something, so we kind of get how that goes. Quite a lot of the industry have started looking at decentralized identity and some of the emerging credentials, is that something that we'll be able to test alongside public key infrastructure?
Well, Alan, please jump in if you've got a view on this, but just one project that we have been advising on with DCIT is there's an office for OFDIA, Office for Identity, Attributes and Verifiable Credentials, or something along those lines. I get so confused with all of the acronyms. One of the things that they want to do is have a digital register of identity verification, authorized identity verification. And that goes into some of these different decentralized sort of models. So the short answer is we can do both. It might not be set up for that at the moment. Is that correct, Alan?
Yeah, it's a quite a deeper conversation to start looking at decentralized IDs. It is something we're working on. There are projects ongoing, but it does put a completely different complexion on how the parties talk to each other. So it's certainly possible. If it's something we want to investigate as part of the POC, definitely we can do. Yeah.
Cool. Okay, so going back to the sort of the technology aspects of it, so you may be familiar, you're familiar, as Maria says, some of you, with PKI. We have a certificate authority which creates digital certificates proving the identity of the key holder. You've got signatures, digital signatures that add a further layer of security on this. And you can revoke and you can distribute those digital certificates, and you can do something called key rotation, which keeps everything up to date, which is a problem. The added complexity without this type of process to do so. So in layman's terms, what that means is that you have, in fact, let me go to the next slide because I think I've got a better sort of diagram. No, let me go to this one. Okay, so an example of this in practice is credit cards. So when a merchant accepts credit card payment, they don't have a direct relationship with the bank that has provided that credit card. They trust the process that is provided by Visa and MasterCard, and they know what the rules of the games are. So this is an example of a trust framework. With a trust framework, a technical trust framework. So actually, sorry, one of the things I should also say, trust framework is not a technical thing. A trust framework has existed for a long time. You might hear lots of chat in the UK government about the trust framework for digital identity. It's simply rules, roles, permissions, governance, and standards. What we've done with that is create a technical way of implementing it. So the directory gives you a list of where the data is, and then the pieces of technology that I've just discussed, the certificate authority, the public key infrastructure, that enables you to actually call an API. So you found the API that you want to call. It has metadata in it that says what and who the API can be called for and by. And then you arrive at the API door, you knock on the door, and you present a packet of technical information, the certificates, the public key infrastructure, digital keys, etc., that enables that data provider to authenticate you and you them, and to check that you have permission, you've got consent, and that you are allowed to access that data for that purpose. And then the API call can be authorized and the data can be exchanged. So that's the technical part of it. And this diagram on the right shows that the consumer aspect of this would typically be consenting using an app. It might be the estate agent as the first point of call, where they say, right, I want to buy this house. I'm consenting to share my data. And here are my identity attributes. This is who I have a mortgage agreed with. This is whatever you need to share. So the consumer has a nice, accessible interface that's easy to understand. There is chat in lots of these ecosystems, and I think UAE are going to be the first ones to announce this and roll this out. But a trust mark and a brand is being developed in the UAE so that the consumer can see that they can trust that data sharing process. And it may be that the UK wants to do something similar, or property wants to pioneer doing something similar, so that the consumer knows that they are going through a process where their data is going to be held securely and treated appropriately, and that they can trust that. Once the that entity that's the first point of call for the consumer has got that permission, they are then able to make these API calls to acquire the data that they need in order to process the purchase of the property. And who they call will depend on where the consumer's data is held and the permissions that they have to call those data sources at that point in time during the property process. And that again comes back to the ecosystem controller defining what that set of rules is and who is allowed to play those roles. Any questions on that before I go on? Nope, good. So how do we get to this point? As I said, it's the technology itself is off the shelf. Standing up the sandbox as it with a simple version, which was what we were going to do with the Skinny, is very easy for us to do. What we need to do in the next 3 months is to sort of work out what the rules are that we want to test, what the standards are that we want to test, and so forth. But the phases to achieve something like this, usually you've got the cultural need. I love open property because it's the one use case every single citizen can identify with. The value exchange of sharing your data to simplify the property purchasing cycle is just easy to understand. Political desire, we know that open property is one of the smart data schemes tabled to go live by 2030. So doing this POC means that we are proving a complicated smart data scheme first in the world, I think. So that's a really exciting one. The regulatory framework is what we're going to be testing out in terms of what needs to happen. The standards, again, there's been lots of work by OPDA, but there's probably some work we need to do on testing standards. The implementation bit, and then the usage monitoring. Those are the sort of aspects of the phase. And these regulatory framework standards, implementation, and monitoring side are what we can test in the sandbox. I think you've done a lot of work on the cultural need, political desire, and the regulatory side already. So in terms of trust frameworks, I think we've covered quite a lot of this already, but the design committee side of it, it's a cooperation between lots of different parties. And again, that's a good way to test it in a POC, is to get your hands in and start playing with some of these processes. It's not about proving that a trust framework is a secure, scalable way to handle data transfer. We know that it's proven at massive scale. This technology is being used for the entire Brazilian open banking, open finance, open insurance ecosystem, and all of their payments, which is processing or enabling 3 billion nearly API calls per week in Brazil. So we know the data transfer in a trust framework works and is scalable. What the POC will do will be to bring together all of the different stakeholders so that they understand the process, and we can test how it can be designed and how it can work, and also work out what we don't know. So the complexity, as Maria said, is extremely high compared to what we've done previously with data sharing ecosystems. So finding out what we don't know and recommendations for next steps is as much a part of this project as proving that data can be securely shared and the whole process can be improved. So here we have on the right, we've just got the sort of basics of the trust framework. It's a verification platform. It provides access management, governance, and security. And that's to all of the different parties that are involved. And again, this is a banking-esque diagram, but I'm sure you can imagine the different parties in the stakeholders in the property circle. Infrastructure components, once a national scheme is stood up at some point for open property, you've got the trust framework, and this is just to show how it all fits in, because the trust framework itself and the technology that enables it is just a piece of the puzzle. It's a critical enabler, but there are other things around that, just to make you aware. You've got the trust framework and participant directory. Again, the participant directory is a developer portal for the B2B parties and the B2G parties in the home buying process, not the citizens themselves. You'd need a customer interface for that. You've got the public key infrastructure, you've got the developer portal with API standards. There's always a sandbox provided because there's always innovation and iteration. So there's as prop techs create and innovate and evolve, they'll need a way to test those improvements and innovations and new products and services outside of the production, the live environment. So a sandbox is a continued piece of the offering. You have a service desk to manage any of the issues or queries, production testing tools and SDKs, which are standard developer kits, so that it makes it easy again for people to innovate. They don't have to be experts in building APIs. They get standard kits that they can follow. You have dispute resolution platforms. So one of the things to consider is what happens if something goes wrong. And you've got the metrics control platform and an intelligent threat platform. The metrics control platform is a really interesting one because you'd think it would be really obvious to monitor how many API calls there were and how it was all working and how many participants. But the whole of European open banking was built at around the same sort of time as UK open banking, with absolutely no monitoring built in at all. They have no clue how many people are using their open banking. They have no clue how many API calls are being made. They have no clue how many are failing. It's a big problem for them that they're looking to address with new legislation. So that's the sort of whole piece of the puzzle. And we're pretty much there. So in terms of the scope of the POC, this is the sort of full fat version, as Maria said. So the grant application that we have successfully won was for a 12-month POC. So a 3-month onboarding process where we build, set up and configure the sandbox. We work out what is going to be tested, or rather you work out what's going to be tested. We're just providing the technical capability to do what you want us to do. So it's working out what standards, what processes, what relationships, etc. will need to be tested, and we will configure the sandbox to suit those particular tests. So the development of the sandbox environment, that onboarding process of 3 months is also going to be educating all of the different stakeholders. So we will run some technical workshops. Some of the stakeholders, we're aware, do not have APIs at the moment. So provision has been made for OPDA to help and fund those APIs to be built. And basically getting everybody to the same point where we know what we're going to do and the sandbox is ready for everybody to onboard and start testing those processes and procedures. So we have engagement built into this project with all of the different relevant stakeholders. And when we get to the project phase, we got the sandbox setup and deployment. That's the technical build. That's our part in this POC. We've got the industry collaboration, which is going to be largely led by OPDA. And then we have a 3-month setup in terms of onboarding, education, configuration, and working out what we're trying to prove, what good will look like, etc., etc. Then a 6-month sandbox, which can test multiple different things, multiple different standards, processes, rules, roles, etc. And then a 3-month wrap-up period where we look at what has been achieved. There's going to be a report document. There will be more stakeholder engagement. There will be workshops, perhaps even a conference to help everybody understand what has been achieved and recommendations feeding back into the open property scheme that is being has been tabled for 2030. Last slide. Second to last slide. Examples. Okay, so I've spoken quite a bit about open banking. Open banking, The scope at the moment in the UK is relatively limited. The scope in countries like Brazil and UAE have gone, well, Brazil has gone further, UAE is going way further. As I said earlier, it doesn't matter what the data is. In UAE, they're looking to connect pensions, wealth, investments, insurance, all of it within the same trust framework. So that gives you an idea of how complicated these things can get. Typically in smart data, as I said previously, there'll be an overarching sort of set of principles and standards for how things are treated, like security standards for the data. But then within the verticals, there'll be a separate operating entity that personalizes those rules to the sector. And then you have interoperability between the different ones. So open banking enables the secure data exchange in the whole of the banking sector, including payment initiation for account to account. But another example, which I think is relevant to bring this to life for you guys, is Connect ID in Australia. So in Australia, the banks all got together and decided that they hold valuable data on their customers and they want to be able to leverage that data, A, as a commercial offering, and B, to improve the ease of life for their customers. So the first use case for Connect ID, so this is a private scheme of the banks that's operated by Payments Plus, which is a payments association in Australia, using this same trust framework that we provide for the UK open banking for a different purpose. And the first use case in Connect ID is age verification. So if you want to buy alcohol online or you want to gamble in Australia, at the checkout, there is a button saying verify with Connect ID. You press that, you select your bank, and this is a process that many of you will be familiar with if you've loaded a wallet, for example, with money in the UK or something similar. You have a list of all of the banks, you choose your bank, the bank then gets an API call to what we call a premium API. A premium API is an API that goes provides a service above what the bank is mandated to provide. So it's an enhanced API call, and they get a micro payment for answering that call. And they simply verify that that person is a customer and that they are above the age of buying alcohol. So it's privacy protecting. That's all they share. They don't tell the data requester your age. They don't tell them your address, nothing. It's simply that you are authorized to make that purchase. So this is an example again of how it might look like for a customer. You have a nice app saying, this is all the stuff that you need to share in terms of buying a house, and please, where it's appropriate for you to do so, because you have a specific provider, please nominate who your provider is, and then everything else gets taken off your hands and off you go. Sorry, somebody did have their hand up, but I think they took it down.
No, it was someone coming into the waiting room. It's all good.
Oh, was it? Okay, cool. So Connect ID, one of the reasons, so how this is funded, it's funded by the merchants. So the merchants in Australia have a legal obligation to make sure that they're selling alcohol to people who are not underage. So it is cheaper and more efficient and more secure for them to trust Connect ID and use Connect ID and pay for that than to do it in any other process. So it's a self-financing, revenue-generating system. We've also proven that you can do payment initiation using the same process, which may be something when it gets to the actual exchange of funds to buy the house. It can be triggered seamlessly for multiple parties at the same time. So again, reducing the risk of the money going to somebody it shouldn't. I live in Norfolk and I bought a house off very normal for Norfolk people who were completely bonkers. And it went down in history that the estate agent that sold our house, and we were the third set of people to try to buy it, they never actually got paid. I've no idea how they didn't manage to get paid, but they didn't. So this type of system can provide technical certainty, it can provide certainty of funds transfer, and so forth, and it minimizes any risk of errors in the process. And I think that is pretty much it.